In this video, we're going to talk about Roku, the streaming device giant. Roku is a great company with great products, and it has gone up more than 570% from its March 2020 low. So in March 2021, is Roku still a great stock to buy? Can it still grow massively in the future? Hello, dealmakers. I'm Ron Kagape, and in this video, we're going to do a quick overview of Roku's business, cover the 9 reasons why Roku is a great company to buy, and the 3 reasons why you may want to avoid it. Plus, I will share my biggest mistakes so far in the US stock market. Let's dive in. Roku makes digital streaming devices that offer content from various services like Netflix, Apple TV, Amazon Prime, and other streaming channels. It was founded by current CEO Anthony Wood. Roku started as a project inside Netflix, but Netflix spun it off because they didn't want to have conflicts with other third parties. Since then, Roku has released more than 9 generations of streaming devices and has reached more than 50 million homes. Now, there are at least 8 reasons to love Roku. Number one, they have very strong operating metrics. In Q4 of 2020, they increased their active accounts by 39% year on year to 1.2 million, increased streaming hours by 55% year on year to 17 billion hours, and average revenue per user by 24% to $28.76. These metrics drive the revenue of Roku, and that leads us to the second reason to love Roku: growing revenues. There's strong growth in revenues. Their 2020 revenue grew by 58%. Roku's revenue is divided into 2 segments: player revenue. This is revenue from device sales, which grew by 18%, and platform revenue, which is revenue from licensing and advertising, and that grew by a massive 81%. So as more devices are sold, the Roku ecosystem becomes stronger, making it more valuable to content publishers and advertisers, thus generating more platform income. And their strong revenue growth is now leading to improved profitability. Roku still lost $17.5 million in 2020, but that may already be shifting because they ended Q4 with $65.2 million in profit. So I'm confident this trend will now continue because Roku has been improving their already high profit margins. Reason number 4 to love Roku. Gross profit margin in 2020 ended at 47%, so Roku has a lot of factor of safety. All of the cash that they're generating gives them a very strong balance sheet. Reason number 5. These are the debt ratios of Roku. Now, they have 1.1 billion in cash and a current ratio of 3.2 and a debt to equity ratio of 0.07. That is very low. They have almost zero debt and they can very easily erase that debt if they wanted to. Now, Roku is very strong in the US and they are now leveraging that strength to expand overseas. Reason number 6 to love Roku: international expansion. Roku has a presence in Canada, France, the UK, and many countries in South America. This expansion is expected to continue Roku's growth. And I'm not the only one who loves Roku. Apparently, hedge funds are net buyers into Roku in the past quarter, and Wall Street has given a moderate buy rating for Roku. Let's dive into eToro and look at the details of Roku. So we're inside eToro, and here is Roku. Roku is currently at 369.50. It went down 5.18% in the current tech sell-off happening in the Nasdaq. That's actually good for Roku. Um, More than 20 analysts cover Roku, and 65% of them give Roku a buy rating, 30% give a hold rating, and 5% give a sell rating. The current drop down in price has actually made Roku very, very attractive because according to analysts, the median price target is $480.35. So that gives Roku a 30% upside on the median price. But the highest estimate on Roku's value is currently at $600 per share. That's almost close to 100% no upside. Who are the analysts that give Roku a buy rating? So we have here Justin Patterson of KeyBank, a five-star analyst, Laura Martin of Needham, another five-star analyst, Mark Zutowicz, I don't know if I pronounced that correctly, another five-star analyst. So all of them give Roku a more than $500 estimate. Let's look at a few bit more. So there's Corey Carpenter of JP Morgan, Jason Bazinet of Citigroup, Michael Pachter of Wedbush gives Roku a hold rating at 475. So he has a higher price target. So I think he may be shifting to buy already. So there we have a lot of analysts. So there's a mix of buy and hold, buy and hold. Daniel Kurnos of Benchmark gives Roku its highest price target at $600. But this was just done recently, just last February of February 19 of 2021. All right, so a lot of people. Where's the analysts that give a sell rating on Roku? There's Benjamin Swinburne of Morgan Stanley. So he is bearish on Roku with a $275 price target. All right, looking over to the hedge funds. Hedge funds increased holdings in Roku in the last quarter. So you can actually see the skyrocketing of hedge fund ownership in Roku. So there is a very, very strong positive sentiment among hedge funds on Roku. So there's a lot to like in Roku. And if you like Roku, please make sure to smash the like button for the YouTube algorithm. That helps YouTube share this to more people, and it also helps the channel grow. Now, not everything is rosy with Roku. There are also three reasons why you might want to avoid Roku. Number one is the strong market competition from the mega caps. Okay, in 2016, Roku had 49% market share. You can see here that Chromecast is 22%, Amazon Fire TV 16%, and Apple TV is at 12%. But in 2020, Roku's market share went down to 38%, and Amazon is up to 33%. That was a massive, massive move up by Amazon. Apple is still a distant 13%. Now, the good thing here is the market is still growing by 13% per year. So, as long as the market is growing, then all players will continue to grow. But it's simply impressive that Roku, a $50 billion company in market cap, is able to hold off the FANG stocks. Now, the biggest threat to Roku's dominance is Amazon's Fire TV Cube. For the first time, Digital Trends has voted a non-Roku device as its best streaming device for 2020. This Alexa-powered streaming device is Roku's biggest competitor right now. Not only that, Roku is also competing with other devices, not just streaming devices. So it's competing with the desktop, the phone, the tablet, simply because there are multiple ways that you can stream your content. Now, the average number of TVs in a household is 2.3 in the US. I don't think Roku users have multiple streaming devices, so that could put a limit on Roku's market penetration because if a family already has laptops, smart TVs, and game consoles, then why buy Roku? But still, over the top streaming devices have a penetration of 38%, and as more people move from cable to streaming or from Blu rays to over the top streaming devices, more people are likely to buy Roku. And finally, reason number three. But before I share reason number three, please make sure to like the video and subscribe to the channel to get my upcoming analysis of Carvana, e-commerce company focusing on used cars. It is an online used car dealership. NVIDIA, one of the dominant chip making companies in the world, with its GPU or graphical processing unit, moving a lot of the high-tech innovations in the world. And a mystery fintech stock. That's my first 10x conviction stock. This fintech stock is sitting on a 5.8 trillion market that is ripe for disruption. It's a huge market without a single dominant player. Also, please check out how you can support the channel by being a Patreon supporter for as low as $5. So please check the link below. When you support the channel, you will get early access to stock analysis, exclusive Q&A live streams, my top 21 stocks, my personal watch list, and my 10x ideas. Hope to see you as a Patreon supporter. And now let's move to reason number 3 why you might want to avoid Roku. And my biggest mistake in the US stock market. Roku is an expensive stock, in my opinion. Okay, let's look at its FinViz stats. So here are Roku stats on FinViz. As you can see here, forward P/E ratio is at 713.32. That is just huge. That is huge. Now, there is no PE ratio yet because right now Roku is unprofitable. So like I mentioned earlier, Roku had a 17.5 million loss, but that is expected to change because next year Roku will already have projected earnings per share of $0.42, $0.52 rather per share. So that gives it a forward PE ratio of 713. That is just huge. It's up there with Tesla and Shopify, with high P/E ratios. Price to sales ratio is also at 25.5, which is also high. Price to book is 35.46. Price to free cash flow is at 689.08. So all of its valuation metrics are high. The great thing with FinViz is it actually tells you if a metric is good or not. So if it's red, no, it's bad. If it's green, it's good. Let's look at Roku's price chart to see, to check the trend. And like all tech stocks, almost all tech stocks experience a downtrend, in the past few trading days, past few weeks, rather. So from a high of $486, Roku is now down to 369.5, and there is no sign of it stopping just yet. However, now feel free to or you can slowly accumulate Roku, or you may want to wait for the turnaround. So if there is a turnaround, just watch Roku's chart, or better yet, subscribe to the channel and wait until I give you a signal that it's already time to move in to Roku. But those signals only are available to my Patreon supporters, so please make sure to be a Patreon supporter as well. Now, of course, that said, I am not a licensed investment advisor. I am just an investor like you who is trying to build up my own portfolio. And I would suggest that you should do your own due diligence. Now, I mentioned earlier that I will also share my biggest mistake. My biggest mistake on the stock market was I bought Roku on a tip and I didn't do a deep dive analysis. So when a dip in the market happened, I panicked and sold. That's my biggest mistake so far. Now, I bought Roku at $152, if I remember correctly, and I sold it at 172 per share last year. Now Roku is at 300. So what's that? No, I lost more than 100% profit. Okay, so that's why I do deep dives now, and I hope you do too. Now, if you don't have time, make sure to subscribe to this channel and become a Patreon supporter so you can get more exclusive deep dives like this. That's why I do deep dives now, and I hope you do too. But I can understand if you are busy, if you're working, if you have a business, you may not have time to do this. So just subscribe to my channel, watch my deep dive analysis. Maybe you can do your decision. You can make your own decisions after watching my due diligence, or better yet, become a Patreon supporter to get even more exclusive deep dives of stocks that you can buy right now. And maybe I can also give you ideas or signals on when you can get in already. Right. I hope that this was helpful to you. So should you buy Roku stock now? Well, don't suggest right to buy it right now. Of course, you can start to put in small positions if you want to, because sometimes we never know if the market will suddenly turn around. So it's sometimes a good idea, to average down just very small positions. But personally, I would just watch Roku right now because I think it still is too expensive. If you remember earlier, its forward P ratio is $713. So just for me, it is a bit expensive right now. I would prefer for the forward PE ratio to be a little bit closer, at least less than 100. Makes it easier for me to buy into it and wait for its earnings to become much, much better. I hope this was helpful to you. Please make sure to smash the like button for the YouTube algorithm and subscribe to the channel. I also suggest that you check out the playlist on the best stocks to buy in 2021. It's somewhere over there. See you on the next video, and may all of your deals push through.